All right. Hey, everybody. Thank you and welcome. Today is Friday, November the 14th. All right. And we are going to be meeting today is FFR Trading Brew and Market Review. So got an impromptu meeting today with professional trader Joe Duffy. So, hey, Joe, welcome.
Hey, thanks, Michael. How are you today?
I'm doing awesome. I'm doing awesome. Couldn't be better. But yeah, so thanks for joining me today with our brew and market review. And I did have a list here of some things to talk about and discussions, but I think I'm just going to scrap that for today, if that's okay with you. And I figured we'd just go impromptu and just talk just openly. Is that okay with you?
What's what I do well. Let's go.
All right. Well, yeah. So let's talk about first, like what the heck is going on with the markets the last couple of days. I know that a week ago, you actually had in one of your videos you put out to your educational videos you put out to all of your members, to your different strategies that you offer. But you put out a memo. You said that you were predicting the markets. You're looking forward in the future of the markets taking a downturn. And man, we saw that yesterday. So what's your take?
Yeah, we have. They were down hard again overnight, but they've come back really nicely. It's I have this saying, I guess, that trends don't give up without a fight, and this one's really fighting. I don't think in the end it's going to win. We're going to have a retracement here, and I don't believe that whatever rally we get from here is going to make another V bottom. Um, I think lower prices are ahead still, and the market's going to have a bit more of a correction. But yeah, so I wouldn't be jumping on the long side trying to catch this thing going back up. That's my opinion.
Yeah, well, I mean, that's some good insight too. And I think that's kind of the sentiment right now in what's going on with the market makers as well that's out there. Your chart last night you went over with all of your members for today's trading. Looked like here's a chart that you posted, and I'm just pulling up your video that you had here. You can see that currently right now, right?
Yep, yeah, I can see it. Yep.
Yeah. So this is on the this is your chart on the S&P 500, correct? The ES right here.
That's correct. Yep.
Yeah. Okay. You want to go ahead and just kind of break down this chart for us that you showed last night?
Well, no, I was just pointing out that as you can, like when this is the ADX, which is it's an old indicator. It's probably been around 50 years now. And it stands for the average directional index. It was made by Wells Wilder. And I've got three different time frames here. 10 is the red one, the fast one, and then a green is a 20, and the slowest one is the yellow. It's a 40 period. What you'll notice is oftentimes, not 100% of the time, but oftentimes when they get down low and they start to nest, so you can see the times when they're down below 20 and they start to nest together, the market's going to move. Usually we'll have a directional trend out of that formation. And you can see most recently here, right at the very top, where these things started to nest and it started to come back down. It's not 100%, but it's one of the things that I like to look at to see. Now, it also doesn't predict the direction. It just says, okay, this market's coiling up and it's ready to have a move. So we also talked about it in relation to PayPal on a daily chart, and thinking as well that that's going to have a move. And I short PayPal yesterday, and it opened lower and stayed lower, despite the fact that the SPY's come back up 10 points, which is quite a large move. PayPal hasn't gone anywhere, just opened lower and stayed down there. So I continue to believe that's probably going to move lower as well.
Wow. Yeah. And then yesterday here you had pointed out this move up here on the ES, and then we had the sharp decline. This is what we were seeing going into yesterday, right?
Right.
I think you indicated this was like a 2,500 point move or something, right?
Yeah, it's a huge move. Like the last part of that chart there, you see the little consolidation. You see a bunch of red bars going down or pink bars going down. And then there's a little weak consolidation in the middle, right where my cursor is, if you can see that. That was the overnight sort of. And then that was the start of the overnight. And then this was early this morning, and it's recovered this whole last part of this decline. It's recovered it all, and it's actually above that little triangle right there where it paused. So it's trying to come back, but like I said, trends don't give up without a fight. That's one thing I learned about the market. So this one's fighting, but ultimately, I think that it needs a bigger correction than what we've seen so far. And it's trying to hold on last Friday's low, and so far it has. Um, I would be shocked if that holds into next week, but market can do anything, of course. So, but I'm not positioned. I'm well positioned from higher levels, but not positioned for further rally. That's for sure. Yeah.
Yeah, and I know you trade various different sectors of the market. I know you trade some futures. You trade, you trade majority of your stuff is in options on stocks. We do have two systems that we monitor and manage and offer here with FFR Trading. It's going to be your target zone system that we've been trading now for well over 5-7 years now, been going on. And then you also, your more recent system, it's a little bit more aggressive, is your quantum AI system. Both of those are pretty unique because it gives you some diversity, and them being able to trade together brings value to both, because you got one mainly on the conservative side, which is your target zone, correct?
That's correct. I wouldn't say conservative. It's a little bit more. It's not as aggressive. It doesn't do as many trades. Some of the trades are spreads, and I think that reason for that, I could do more trades, but it's me and making all the decisions. And I'm just going to say that because I differentiate it from quantum. So I will tend to be, since not too aggressive, because people are taking the trades, you don't want them to get buried, right? Whereas quantum is just AI. The trades come off the computer and they go to the broker. So it doesn't have a conscience or a prudence button or whatever, or just a cautionary button. It just takes what the computer says and sends it out. So yeah, over the long run, quantum has probably made more money than me, but it also has bigger drawdowns than I do. So that's the difference. Yeah.
Right, but you're pretty positioned well right now with target zone, right? I think
Oh,
you got,
absolutely,
yeah.
yeah, absolutely, yeah.
What are your two positions you have on currently right now?
Well, I got three. They're all spreads and they're all in the S&P. One of the things that I'm starting to find is that as we get this one-day options where every day has an option expiry, more and more option money is coming into the indexes, and less goes to individual stocks. For myself, I trade a lot of stocks and write options against them, and that's how you mostly use individual stock options right now, because in terms of moving size in an individual stock, even the liquid stocks like Microsoft and Amazon and Tesla, the spreads are getting big and the liquidity is getting less, I find, whereas the liquidity is getting more and spreads are getting tighter in the SPY, even, yeah. So
Yeah, well, I mean, it's a good approach, because this whole entire year, both of your strategies, even the quantum AI, they've navigated the tariffs very well, and both strategies are extremely profitable. I know we've heard from a lot of our clients that are very happy with what's happened throughout this whole entire year, and so whatever you're doing it right. So keep up the good work. So
yeah, I've been pretty consistent. Thank you.
yeah, no problem at all. Yeah, I mean, and thank you. I mean, it's awesome. We get a lot of clients calling in, and we've gotten a lot of good reviews. So yeah, so let's do this. I don't want to be on the phone too long. I know you gotta. I know you have to follow the markets today. You got some positions that are very key to you. So, and you want to make sure you monitor those. But if you were to give the audience today anything to look forward to going into the next couple of weeks, at least, maybe even through the end of the year, what would be your feedback?
Well, I guess it's still going to be cautionary. I just think for right now, long is wrong for me. I'm surprised at the jump back today. It almost looks V bottomish, which we've had so many of. I'm just positioned for that. It's at least going to stay flat from here. And when I say flat, for reference, the SPY's around 675. So if it stays there or below, I'm fine. I'm going to be okay. But if it starts to get back up into the 680s again, I'm not going to be as happy. So So yeah, I'm not trading the long side right here.
Okay, so yeah, it's basically what you're saying. It's going to be a day by day lookout as far as being cautious, play your position correctly, and just watch out for that bottom, because when the bottom hits, it's going to go quick, right? So on the downside.
Yeah, the downsides always happen quicker than the upside for sure. And the bounce back today, like I said, it's impressive, but I'm not a believer that a month from now or 2 weeks from now we aren't going to be lower.
What about the speculation of a market collapse? You think that's on the horizon?
Well, a collapse may be too strong of a word. I think that the market could test the 610s in the SPY, and it's 675 now. So I guess that's a 10% correction. So the collapse may be too big of a word. And that's, you know what, predicting black swan events is crazy. Even the 610, for me, I think that's what's going to happen, but I'm certainly not betting that it's going to get to 610. And I have no positions for that. And if it looks like it's going to turn around at 650 or 660, then that's what I'm going to do. But if you have to, gun to my head, I think the 610s are coming.
Well, I appreciate that. I mean, Joe, you've been doing this for well over 30 years. You've traded through various different collapses. I'll use that word again. You've traded through presidencies, wars, corrections, and you're still trading today, and you're very successful. So, your opinion matters, and your insight and your expertise matters. And I think the audience is going to like that. So I appreciate it.
That's great. No, thank you. Appreciate it.
Yeah, well, hey, thanks for joining me today, Joe. I appreciate it. I'd love to have you back on, and we'll get you back here again in the next couple of weeks for the audience and get some more insight, and we'll see what happens after Thanksgiving. We'll get you on at the beginning of December. So everybody, thank you very much for joining us. Be safe in the market, all right, and happy trading.
Okay.
All right, thanks, Joe. Have a great day.
Okay, bye, everyone.